Hey everyone, this is Mabel from Girls on the Money, and I am back to answer one of your awesome questions. As you might have noticed over in my Instagram account at Girls on the Money, I've been asking the community there to send me questions. So once a week, my goal is to answer at least one of those questions. Thank you for those of you that have sent me, some awesome questions about business, investing, finance in general. And for this week, the question of the week is how to decide if a stock is worth buying. This is such a great question, and I love that it was asked because many times people jump into investing, jump into buying a stock without really understanding what's under the hood of that business. As you might have heard me talk over and over again in my social media accounts, in my blog posts, in my courses, I emphasize the importance of doing your homework, doing your due diligence before buying anything. You should never take anybody's word for whether or not a stock is good or an investment is good. Because at the end of the day, it's your money. You want to protect your money, and you want to make sure that your money is working hard for you in something that is of high quality. So you always want to do your homework. And I love this question about how to decide or how to research whether or not a stock can be worth buying. Before we go into this topic, I do want to remind you guys or emphasize that when it comes to stock investing, there are no guarantees. Whenever you invest money in a business, in a company, you should do so with the understanding that it doesn't mean that the company is going to make you a lot of money. Like, there's no guarantees about that. The expectation is that, yeah, you build a portfolio of high quality investments that make you a lot of money, but you always want to approach investing with the understanding that there are no guarantees. This is why investing can make you, accelerate your wealth faster, because it comes with the risk of certain things not working out. So you always want to keep that in the forefront, and that's why building a diversified portfolio is so important. And this is something that I explain in my courses, and I go over it more in depth. But if you want me to have a topic about this, I'd be more than happy to do so. Let me know in the comments if you want me to talk about diversification in a future video. But for now, let's focus on the question of the week. How to decide if a stock is worth buying. So I decided to split up the answer to these questions in two ways. One of them is the core research that I recommend that you do in terms of looking up some reports and some financials and doing some analysis. And then another part is characteristics that I personally look for in the stocks that I invest in. So let's get started with the document that I believe any beginner investor or any investor in general should start their research looking at the annual report. Another name for annual report is 10K, and this is a document that is required by the SEC, Security and Exchange Commission, which is the entity of the government that regulates publicly traded companies. So all public companies that trade in the United States that are regulated are required to file a 10K or an annual report every single year. And this is just one of the many reports they have to file. They have to file a 10Q, which is a quarterly report. They have to file, all these other NAK, different reports about different things. But for today and for now and for the basics of these research tutorial, we're going to focus on 10Ks. And how do you find that document? Well, you should know that the document is public, it's free, and the easiest way to find it is if you go to the website, the official website of any publicly traded company or any stock that you may be interested in. There will be a tab in the website. One of the tabs on the top or maybe on the side is going to be called Investors or Investors Relations. It's going to be a variation of those names. When you click on there, it's a incredible world of investing data for people that are maybe interested in the stock or maybe already own the stock and want to keep up to date with what's going on with the company. So once you are under Investors Relations, you can find the annual report. Just look around the page for anything that says annual reports, 10K, something like that. Once you are in that page, find the most recent annual report for, you know, any particular year. It could be, for example, if I'm recording this in 2018, for some companies, maybe the latest annual report is 2017. So you want to just find the latest one, which will have the most up-to-date information. And then you will notice when you open that document that that report is 100 pages, 98 pages, maybe over 100 pages. Am I asking you to read that entire document, to maybe spend a whole weekend reading that, you know, maybe cancel your plans? No, I'm not asking you to do that. If you start reading an annual report from beginning to end, you're going to get bored. You're going to wonder if investing is right for you. You're going to be wondering if you should hire a lawyer to read it for you because of all the legal information. So no, you don't have to read the entire thing. Like, I don't read the entire thing, but there are selected parts of the 10K that are very, very important. So, and I cover all of these stuff in my investing bootcamp, in my course, but today I want to share with you some of the most important, you know, some of the sections that I consider important that when you're doing your research, when you're starting your research, it will be good to look over. So if you open a 10K, look for the table of contents, and the very first section that I want you to read as you kick off your research is the the business section. So the business section is one of the first sections in the annual report, and there you will find information about the business. How does the business make money? If the business has other companies under its umbrella, maybe you don't realize that they own other products, other services that you use, and you didn't realize that they own it too. So reading the business section is an incredible resource because you can kind of get to know the business better. Even if you feel that you already know it, it'll give you more of an insight. You can understand how the company makes money and other data that maybe you were not aware of. So this is great for your research, and maybe you find out amazing things about the company that get you more excited to learn more, or you find out that, wait a minute, they get involved in this type of businesses, they own this company that I don't really like, I don't really trust. So you can find all this amazing information that can propel you into, you know, continuing your research and deciding, you know, what way you're going towards as you try to determine whether or not that stock could be a good investment for you. So the business section is very important. Somewhere under the business section is something called strategies or plans, or, you know, somewhere around there. You want to know that, okay, it's good if the business has done amazing for many, many years, 50 years, 100 years, but historical performance of any stock is never a guarantee of future performance. So you cannot say that because a company has done amazing for many years, you are guaranteed to make a lot of money going forward. You know, taking it back to the beginning, there are no guarantees. Although having a healthy foundation, a healthy history is important. I look into that. I value companies that already have a healthy foundation, and that is a requirement for me. However, another requirement is, what are they doing to continue thriving and growing in the future? You want to read the plans and strategies and determine how does the company plan to continue being profitable, to continue growing, to continue expanding. And you want to put on your investor hat and determine, does that make sense to me? You know, does that give me a positive vibe in terms of where the company is going? Do I like what they're saying? You know, it's good to be informed about, you know, where it is that, you know, the company plans to go or how it plans to grow. So that's another part of the 10K that you should be reading, the strategies and plan section somewhere under business. And then another part is, because I have my notes here, risk factors. So companies, as part of their 10K setup, they will also list their risk factors. And risk factors is just things that they consider could be dangerous for the business, either competition, maybe a trend that's coming up, and they're wondering if how the trend is going to help or affect the business. So you want to read some of the risk factors. And just to let you know, just a heads up, the risk factors page or pages it can go on and on and on. It could be like 3 pages long. I've seen it before in many stocks when I'm doing research. You don't have to read every single risk factor. I usually recommend reading maybe 3 to 5. The top 3 to 5 will give you a good understanding of what are the top things that the company thinks could be a risk for the business, and you want to keep that in mind. Okay, this could happen, but can the company kind of work its way out of it? Can it still be successful despite of that? You want to look into that. You just want to be aware of possible risk that can come about in the future. And finally, one of the top things that you want to look into, and I don't want to go into every single one because one, I teach that in the class, and two, I don't want to bore you with all this information, but the final factor is financials. So you want to, and again, go to the table of contents of the 10K, find financials, selected financial data, I think it's usually called. Go in there, check out multiple years of financials, just read over it, see whether the company is making money, has it been making money over time, does it have cash, how is the debt, is it a lot of debt, is it reasonable debt, is it no debt? You want to look at those kinds of things. And that's something that you don't need to be an accountant or some financial strategist to read this stuff. I teach a very simple way of reading it, but all you have to do it's not rocket science. You can go into the financial section and just read through the numbers and see if the company has been making money, does it have profits, does it have cash, how's the debt, stuff like that. And there's other factors, but those are some of the most important ones. And that is what how I would recommend you kick off or start off your research when you're trying to determine if a stock could be possibly a good investment. So reading the 10K could be your first, your starting point as you kick off your research. So that is that part of my answer to this question. My other part is a few things I want to touch up on of factors that I consider also very, very important as part of an investing research, as part of trying to decide if you really want that stock in your portfolio. So the first one is, do you understand how that company makes money? Does the business model of how the company generates money, daily or whatever, make sense to you? A lot of people buy stocks with the expectations that, okay, somebody told me about this company and I don't really understand what's going on, but I'm just going to buy it because I think I'm going to make money. My cousin's friend made some money, so maybe I can too. Don't fall into that trap. Understand it for yourself. We live in times where information is so readily available. It's free. You can find quality resources, especially if you're looking into the investors relations page of that company. Get an understanding of how exactly that company makes money, and does that make sense to you? If you can explain it to somebody else in simple terms, that's usually a good sign. If you have to kind of do some deep research into okay, they're talking about this, what exactly is that? How does that translate into revenue for them? You don't want to get overcomplicated with that, and you want to be very careful with understanding how exactly a company is able to make profits, because that could be one of the things that can become challenging in the future if you didn't understand it in the first place, and then the company starts doing poorly and then you're wondering, okay, why did I buy this now? Did I have a good reason for buying that stock? You don't want to get into that. So have a clear understanding from the beginning. 2, solid foundation of profitability. So I like companies that are already profitable, are already making money, and tying it back to what I said before about strategies for the future. Companies that are already making money have a clear plans for how they will continue to make money. I will never buy a stock that's not making any money, that's not profitable. For example, IPOs are very popular, and little do people know that a lot of IPOs, which is when a company becomes public for the first time, that is initial public offering, that's what an IPO means. A lot of IPOs are not even profitable. They're from companies that are not even making money. So I don't, if I think it's a company that's maybe could be a good investment in the future, I don't mind waiting. I'll sit in the sidelines. I'll wait it out and see if this company can really generate some money before I get involved in it. And a quick tip I have for you, this is not the end of your research, but a quick way to find out if a company is profitable or not. If you look up the name of a company on a website like Yahoo Finance or Google Finance, you're usually going to see the company's profile with a whole bunch of numbers, like the price and other data. One of those numbers or one of those data points is EPS, or earnings per share. If that number is negative, it means that the company is not making any money. It's not profitable at the time at which you're looking at the profile. So like I said at the beginning, if a company is not profitable already, I do not feel comfortable investing in it. So be very careful with that. And you want something that I personally consider extremely important is that a company is a strong leader in the industry in which it operates and has very minimal, if any, competition. I am very afraid, and I usually stay away from companies that have way too many competitors, where there's so many competitions, many people trying to fight for the same business. It makes me especially nervous when consumers have options like, okay, this company is giving me a cheaper price and I have a lot of options, so why should I stay with you when this one is giving me a cheaper price? Companies that have too many competitors, like the saying goes, if there's too many cooks in the kitchen, it's time to stay away or something like that. I agree with that. I like companies that have either like very minimal competitors, maybe one or two max, or they're like so major that they don't even have, you can't even say they have competitors. Those are my kind of companies. Very little, if any, competition. And obviously competition is everywhere. It's very hard to stay away from it, but when there's like 10 companies or more or whatever doing the exact same thing, and the consumer can just pick and choose whenever they want, that's very dangerous, especially when you're on the investor side of that. So be very cautious with that. Put on your investor hat, as I always say, and ask yourself, how does that company have a lot of competition? Can the consumer just jump around whenever they want? Usually that's a red sign, at least for me personally. And that is some of the top 3 things that I also look into when researching or determining if a stock can be a good investment. And I hope this video was helpful. If you have any questions about what I just talked about, you can email me at girlsonthemoney@gmail.com. If you want me to answer a question in a future video, email me there as well. You can find me on Instagram at girlsonthemoney, and I will put all of my links below. If you like this video and if you like my content, please share with your friends and family, like the video, and I will hope to see you next time in another edition of Girls on the Money, where I answer your questions. Bye, guys.